Hey everyone, today I'm going to introduce you guys to Jennifer Fallon. I just met her actually this week. We were talking and I really liked her strategy. So I've talked to a lot of syndicators, different topics, different expertises. I liked her theme and how she does things. So that's what I wanted to share with the audience and let you guys listen to her. So Jennifer, kind of give you a history, how you came to do what you do now, and how long have you been doing this now?
Yeah, so I've been doing real estate really since 2010. We kind of learned the house hack, and my husband and I did that um, for several of our houses, but really full time. I didn't get into it full time until 2018. I was raising kids and being a mom, and I just didn't care. But then in 2017, I worked in corporate, hated my job. Well, I loved my job. I take that back. I loved my job, hated my boss. I had the worst boss. And I just, we started to learn about real estate, doing it full time. And I was just fed up. So I walked out of my job and decided I was going to do this full time. And like most investors, we started out single family. I kind of made it my ministry to help people that were going through pre-foreclosure. So we would stop that process, help them. But in San Antonio, where we live, there was just we're being inundated with new people moving in. And so there wasn't clean, safe, affordable housing for these people that were going through pre-foreclosure. So I learned about apartments and I just was trying to just get a small 14 unit to
Mhm.
put these people. And our first deal was 324 units and it was a $30 million deal. So I was like, well, if I can do that, and of course I had help, but if I can take that down, I can totally do this full time. And it's so much easier than single family. So we just kind of let all our single family go and now we just focus on multifamily.
Awesome. I have a quick follow-up question. So you were looking for 14 and you all of a sudden you ended up with 300. What caused that jump? How did it come about? Because that's not like a small jump. So how did it work? Kind of, I guess, give a high level, details on how that happened.
Broker relations. Look, I didn't want to do that deal, right?
Mm.
That deal terrified me. And there was no way a newbie is going to do that deal all by herself, right? Because we've done LP stuff, but as a GP, but I had a very hungry broker that would not, he was relentless. And he was like, we have to take this down. We have to take this down. And he finally just beat me down. And so we underwrote it, the numbers worked, and I just kind of went to our mentor, asked for help, and I was like, will you take this down with me? I went to him 3 times. And I was like, this is an amazing deal. Because then once I saw the numbers, I did get excited. I wasn't scared anymore, right? The numbers were beautiful. And he didn't want to do it because it was fractured. So instead of like it being in one little complex, it's like a mile of apartment buildings. And
Mm.
I was like, it doesn't matter, right? Like we'll put the office in the middle so nobody gets left out. 3 times I went to him and he turned it down. And then I found somebody else that we took it down. And now he's like, I should have done that deal. And I'm like, you should have, because it is a slamming deal.
Gotcha. Awesome. Well, with that, let's get into this, right? Based on our conversation, you kind of mentioned like how you see people take too much risk these days, especially now. And then you're seeing the opportunity coming up. So kind of go into your three key, I guess three or four or five, whatever, top level things that you look at, whatever it is, macroeconomics or underwriting, whatever you do on how conservative you are. And, what are your, when, how do you get that confidence? Like, okay, this is a great deal.
Yeah. So, I mean, I'm very particular about where we invest,
Mm.
right? So I don't want to buy anything in a area that is not landlord friendly, right?
Mm.
So I want to make sure that the eviction laws are strong. I want to make sure that, taxes are low. Um, where are the working people, right? Where are the people that will pay rent and appreciate
Mhm.
their, living conditions.
Mhm.
Where is the path of progress? So I
Mhm.
love these little tertiary markets
Mhm.
that you can still buy at a discount. They're cash flowing, right? But if we can hold them for, maybe instead of 3 to 5 years, 5 to 7,
Mhm.
give that path of progress time to emerge. Now we've, we're playing the equity game.
Mhm.
But we never buy anything that isn't already cash flowing. So even if the economy tanks or something foul happens, as long as we can collect rents, we're cash flowing, right? And we may not be able to, raise rents. We might not be able to sell in, the 3 to 5 years that we want to, but we're always making money through the time that we're holding. Other things that I look at, I never want my expenses to be over 50%. Really, 40% is the sweet spot, but there's some flexibility there, but never over 50. If the expenses are over 50, it's not a deal.
Mhm.
Another thing is, we have to be in the black. It has to cash flow. I said that I really want it to be um, 19% on the back end conservatively. So if it's, 19% cash on cash, anything over is great. I always try to under promise and over deliver.
Mhm.
And yeah, and so we just try to really stay in that buy box. I am not the underwriter, right?
Mhm.
I know what lines to look at. My husband is a CPA
Mhm.
and he does our underwriting. And then we hired another underwriter to kind of assist him.
Mhm.
So when it comes down to like really digging into the calculator, I just know what lines I want to look at.
Mhm.
And then they do the deep dive.
Awesome. Did you say 19% cash on cash year, or are you talking about more?
Okay, yeah. So we do 6% typically cash on
Okay.
cash a num, but it's the 19% back end. I'm sorry. Yes. So thank
Gotcha.
you for clarifying that. Yeah. That would
Gotcha.
be
I'm like
stellar. You're
19%.
right. Like
Wow.
it's everybody's money.
Yeah, yeah. Everybody will be running to you. But I'm in, creative financing one where my coach, he doesn't touch anything below 20% cash on cash per year. But that's single family, completely different. So I'm
Completely different.
Yeah, completely different where you can't get that in multifamily, which is different beast. Uh,
Hmm.
so awesome. Well, so in that said, that's a great information for people listening. Hey, that might give you some ideas on how, conservatively do it, right? If you're looking into multifamily and how essentially Jennifer does it. Now, the other factor that we talked about is how, one is first, let's get into who you concentrate on, the investors you concentrate on, because you're not doing the normal 506c. So kind of go into why you concentrate on the B, and then we'll get into the other question on how, the other one I wanted to talk to you about, but I wanted you to explain why you kind of focus on B, not C.
Yeah. So really, I want everybody to be able to play this game, right?
Mhm.
I want everybody to learn about investing. I want everybody to do it. I want everybody to see what a lucrative
Mhm.
investment this is and how we can compound your money.
Mhm.
And so most of the people in our circle, our closest family and friends that we most wanted to make millionaires, they're not accredited investors. They're blue collar workers, that just happen to have, a little bit of money in savings, enough in savings to be able to participate, or they left a job and they were able to roll that old 401k over into a self-directed and invest with us. And so I really want everyday people who are not accredited. They don't make a lot of money, but they have some, right? They have a nest egg and they're wanting to compound that money. And so that was really important to me that, everybody gets to play.
Got you. And those, for people who are not familiar with 506C and B, C is an accredited investor. That means you kind of have a net worth of either $1 million or 200, if in salary, whatever earnings per year, or if you're a couple, 300. And then B is more of a personal relationship. It's more, you can't advertise and all that stuff. You can look up those rulings just for people who do not know. I guess you can go look it up. But that's, I just wanted to throw it out to people who are listening, maybe not familiar with that terms and what that means. So with that being said, since you're working with those kind of investors, one of the things is obviously you talk about the nest egg and all, it takes a high level of confidence for them to, spend that money, right? Give that money to you. So you kind of shared with me how you kind of protect their money and how you give them their, how you work, right? Basically, you did say how conservatively you do the underwriting. That way, you're not investing any risky ones, so you don't lose money. But kind of explain the process and how you built the relationship and the confidence and what is it you talk to them about, making sure they have the confidence that you're going to do the right thing.
Yeah, so I'm just very involved in the community, right? Very involved in church, very involved with my networking groups. And again, it is building the relationship, building that trust. But really the numbers are the most important thing, right? Because I can say whatever I want, but the numbers don't lie, right? And so as long as we stay very conservative and they understand why it's conservative, then that's really the biggest piece. But for me, I'm very protective of that money, right? I really, really am, because I know that this might be all they have as far as a savings, like, right? And so I want to make sure that we are being good stewards of their money. So all of the boxes have to check. We never do a deal just for the sake of doing deals. Like all the stars have to align beautifully for it to be a deal. And then honestly, I just tell them what their benefits are. And the fact that I am so protective, we watch these numbers like a hawk. We are constantly monitoring our management company, making sure that everything is as it should be. If something does go awry, we catch it early so it's fixable. Because at the end of the day, I will always make sure my investors' money is taken care of. So if something weird did happen and their money was lost, I'm going to replace that money. And I don't think a lot of syndicators will make that promise. I absolutely will. I would sell my house. I would sell my cars. And people laugh when I say this, but I, honest to God, mean it. I would sell my kidney. I would sell a kidney to make sure they were made whole. And my family is on board with that too, because, we kind of joke, like, if something goes wrong, be prepared to sell your kidneys. But they are. I mean, and we're all in as a family. Like, we would be willing to sacrifice everything we own to make sure our investors are made whole.
That's an awesome way to put it. And then, I guess, yeah, let me ask that. I mean, that's what I wanted to talk about, because that's why I wanted to, you to be on the podcast, is that norm, that way of talking or speaking or getting, talking to investors is, I never heard that before. So that's why I wanted you to come on the podcast and share that, first of all. Second thing is, what kind of put you in that mind frame? Like, when did you kind of decide? I mean, at first it was more about, putting people in, places that they can afford, to this whole concept, right? So how did that, like, kind of, when did that mind shift to, okay, this is what I'm going to do, but also get the family all to buy into what you're selling, essentially, like, hey, if anything goes wrong, we're all in to sell everything. So kind of explain through that process. How did you guys work through that?
Yeah. Well, really, like, we built all of our businesses as a family, right? So we were all in, it was swim or swim for us, right? There was no sink. We were going to build. But really, like, this is just how we felt as, I don't know, good fiduciaries of people's money, is we had to do the right thing and we had to be willing to do the right thing. And we watched these other gurus lose people's money and then act like nothing happened, right? Like, we're just all supposed to forget that they've lost millions of dollars, or they've been to prison, or, and then they show up at these events and they have their own events. And I just think, how do you have the balls to even ask anybody for money after you just lost millions? I just didn't want to be like that, right? And so we decided like we were going to absolutely be conservative. We were not going to be greedy. We were not going to be prideful. Our egos were not going to be blown up, right? We weren't going to love the money, right? We weren't going to be, love where we're just going to do deals and we're just going to take money and spend it so we can get that acquisition fee. We weren't going to be that way. And that was a decision that we were happy to make. And I like nice things. Do not get me wrong. Mama likes to have nice things, but I'm not driven by it, right? So if last year we didn't do a single family deal the entire year. And I was okay with that. And my family was okay with that. We pivoted and did other things. But my focus, Jen's focus in Vorsa Investments is really to raise the money, which I love because I get paid to party and build those relationships, which I'm an extrovert and I'm a social butterfly and I love to do those things. And I truly believe in our business. I believe in our business model. I believe in real estate as a whole. And I just feel like everybody should participate.
Awesome. I got a couple of follow-up questions. Now, obviously, the numbers wise, you're doing very conservative. Obviously, you're making sure that there's very, very, very little chance of losing the money, right?
Mhm.
Is there anything else you do to hedge against the worst case scenario to make sure you're not selling your kidney essentially? Is there anything?
Yeah.
I'm just curious about that.
Yeah, no, I mean, just really being forensic about our numbers, staying on top. We look at the numbers every day. We're managing our management company very closely. But I mean, really, that's, it. But we are foreseeing, like if we foresaw that something was happening, right? Like communication is everything, right? And so I will absolutely communicate if something is happening to my investors, right? Like, hey, this is coming, like we don't know, like I don't always have the answers, right? But I want to let them know, like I foresee something maybe might be coming. So let's just let me look into it. I don't want to create panic, but if something were to happen, I need them to already be aware that this thing is happening. And then maybe it just looks like instead of like 3 to 5 years, we have to hold this property 7 to 10 years.
Gotcha.
And they're aware of that. But again, if we are continuing to cash flow, because we bought it cash flowing, and we certainly try to do a good job, or we should not be cash flowing. Again, even if we can't raise rents, hey, we're still getting this much money. We're still cash flowing. We just need to hold it another 2 to 3 years because this happened. Everybody at the end of the day wants the most bang for their buck, right? They want their money compounded. And as long as they're getting their quarterly checks, I don't think anybody really minds holding on another couple years to get that bigger bang for their buck.
Gotcha. Awesome. Well, in that sense, like, let's get into this, right? We also talked about where you're seeing or potential, or at least you're seeing the potential of a lot of deals coming through because of the bad deals other people made. I don't know how much you want to get into that. Maybe, I don't know. It's up to you. I'll let you get into it a little.
Yeah.
Maybe explain,
Right. Well, I mean, we really saw a lot of operators buying, like the frenzy buying last year when there were variable rates and interest rates were high and there were bridge loans and, all these people, were just buying up everything. And now, their bridge loans have come due, their variable interest rates have skyrocketed, and they're losing their assets. And it's sad and it's awful and I hate it. And my heart breaks for the investors, right? Because I mean, some of these people are dependent on this money for retirement. Like they're banking on this to be able to retire early. And now it's gone. And that's one of the things, like, most real estate investors will be like, oh, we're different than the stock market because we won't lose your money. The stock market, once it tanks, your money's gone forever.
Right.
And we're seeing this where we shouldn't be seeing it.
Yep.
Right? Like this was very avoidable. And again, this is where we as a family agreed we were not going to be greedy. we were going to be conservative. We were not going to be bad fiduciaries. And this is what those other operators were. They were very greedy and prideful and bad fiduciaries, and they're losing it. And we saw it coming, which is why when we didn't do a deal in 2023, we were okay with that, because I just hit money raising hard and let them know, like, hey, the blood is going to hit the water soon. And this is the opportunity that those that are patient wait for, so that when everybody else is having to liquidate at discount, or now these properties are bank owned, we get to come in, buy them at the discount, and do the right thing.
Awesome. Well, last question before we get into the, last three questions I usually ask everybody. How do you keep yourself grounded, or the family grounded, in the sense that, hey, we're not going to shoot for the stars and then, I don't know, get completely crashed, right? Or be the shooting star, essentially, falling star, right? How do you guys, or you or yourself, like, is there any practices you personally do? I don't know, whatever, spiritually, or whatever the case is, or just the mindset wise, what is that you do practice or keep in practice, or keep something in mind, or daily practice that you keep in mind whenever you're looking at a deal, like, hey, this is our thing, and that's always the principles, and we stick to those?
Well, number one is fear, right? Because I don't want to be one of those operators whose faces are smeared all over the news, right? Like, I don't even know how they exist after seeing their faces on, nighttime TV.
Right.
So that's number one, fear. But yeah, just being strict on, our faith, and our integrity.
Awesome. Perfect. All right, let's get into the last three questions. Well, the first one is, what's the best book, or the latest book, or whatever, your top book you have read that you recommend to everybody?
Oh my gosh. Okay. So my number one book to ever recommend is not even a business book, but I will give a business book too, because I do love it. But The Search for Significance, by Robert, gosh, it starts with it's a McCullough, I think, or McCullum.
Yeah.
Anyway, dude, let me tell you, that book changed my life. It is such a great book, and they have one for teenagers. So if you can get your teen to read the book, and there's like a little workbook in it, I mean, powerful, powerful. And then my favorite business book, though, since we're talking about business, is Who Not How.
Yeah, one of my favorites.
Love Who Not How. That's like next to my Bible, right? So, and it's highlighted, it's dog-eared, it looks like it's been to war. I've been the only owner of it, and but such a great book.
It is. Long story. I've been in a personal development. There's a course I've been in. That was the whole theme, right? Building teams, how to build teams. It's not about you. Let go of your ego and then find the help. What inspires you to get up and do what you do every day these days?
Because I like nice things. Yeah. Okay. So yes, but the other part is my bigger picture, my long-term vision is to have homes, apartment complexes outside of every major city in America that houses teenagers that have aged out of foster care before they've graduated high school. And then whatever other teenagers are homeless for whatever reason, they're homeless. So let's just eradicate that and stop that nonsense.
Awesome.
So that's my bigger goal, my bigger picture. Like, that's what excites me to get out of bed, is that I have this passion for this project, and there's an urgency to it. Like, I really feel like I'm in a hurry to do this.
Awesome. Perfect. Yeah, I forgot to ask you about that. So perfect time you mentioned that. All right. The last one is, what's the one tip that has helped you that can help others? Business, personal, doesn't matter. One tip.
Yeah. I mean, really, the number one tip is everything that we've been taught. So most of us come from, middle-class families. Everything you've been taught, please forget it. Like, flush it down the toilet. It's gone. We've been so erroneously educated about finances, that please be open-minded, right? Like, everything we've learned, is wrong. And so just, learn with an open mindset, learn, with, I call it the millionaire mindset, right? Like think like the millionaires think. And even if you don't want to be a millionaire, that's fine. It's not for everybody. It's definitely for me. It's not for everybody. At least be educated and know your options.
Awesome. That's a great tip. All right. I'll be posting Jennifer's information. You can reach out to her, a couple of different ways. One, if you want to invest with her, I mean, obviously it's a relationship building. Like she's not a 506c. So, there's a relationship building. That's what she's interested in, building that relationship. And the second thing is obviously her passion project. If you think you can kind of combine forces and maybe work through that project and help her out and obviously go together and help teens out essentially, that would be great too. So reach out to her. I'll be posting her links. Thanks again, Jennifer, for taking the time and sharing all the information you did.
Yeah, thank you so much for having me. I really appreciate this.
Yeah.